Hey everyone, it's Evan here from the Trade Risk on Friday, November 18th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and then finish off looking at some sector analysis. Specifically in today's video, we're going to talk about small caps reversing and helping lead the market to the upside. We got energy, which failed to hold last week's breakout, and we got metals that are trying to make a run to the upside. We're going to talk about all this when we jump into the charts here right now. All right, let's jump right in here with the S&P 500, the SPY ETF. You can see we closed down slightly here on Friday, down 75 cents in the SPY ETF. That's good for 29 basis points to the downside. If we look at Friday's candle here, you can see it was an inside candle. So that means we traded completely within Thursday's range. And Thursday was a pretty wide range day. We'll talk about that in a minute. Let's look at the weekly chart first. So if we kind of keep this big picture in mind here, we can look at the weekly and notice we did finish lower on the week. It was basically flat, down 22 cents, but really just moving sideways. And we've been moving sideways now for about 4 weeks. If we go back to this candle right here, this was the end of October. You can see we closed right around 257.60. We closed at 257.80 today. So for about 4 weeks or so, we've gone nothing but sideways. It's not inherently a bearish characteristic whatsoever. We've had a strong run to the upside throughout September, October, and some moving sideways here, consolidation through time, as they call it, is something that we could welcome here if we are still bullish on this market. If we take a look and just zoom out a bit more, you can see the last time we spent about 3 or 4 weeks moving sideways was back in July. That did result in a slightly larger pullback. I think we got up to maybe 3% or 2.5% pullback, but right about to this 20 period or almost touching the 20 period weekly moving average. That's something we could keep in mind here if we start to roll over from these levels, if we start to lose this support around 256, which we'll look a little closer at in the daily chart in a moment. And you can see now that the weekly 20 period moving average is down here around 250 or so. I'm not saying this has to happen by any means, just giving us reference points to look at on these longer term time frames to think about if we start to suffer a larger pullback. If we go down to the daily chart and we sort of refine these levels just a bit, I'd say Thursday was the real important day here, and we talked about in our Tuesday weekly recap here, in our midweek video recap here on Tuesday, we said, look, this is a pretty good line in the sand to use going forward. We had 3 tests of this 256.25 level, and if we definitively sort of close below that level, that would probably open us up to at least a retest of maybe 254, just open up the floodgates to potentially a larger retracement. And what we saw was on Wednesday, we got that intraday push below this level. It scared some people out. We had this nice long tail down here to about 255.60. So we made, almost a point of extra progress to the downside. But notice the dip buyers did step in. They drove us off the lows. They closed us right at this sort of key area that we discussed. And then we saw this sharp bounce higher on Thursday, up almost 1% in the SPY, closed near the highs of the day, and then finished off the week a little bit off those highs. So really what we have here is we got a good demonstration of support. Once again, I'll basically say the same thing we said on Tuesday. This 256 area, you could adjust it down maybe to 256 flat. That's an important line in the sand here in the short term. I think that's something we can still measure risk against. We had a little bit of a washout underneath it on Thursday. It proved to hold based on Thursday's gap higher, and so far we are above it. We haven't confirmed higher. We haven't made new highs yet. So I understand that, I would consider this basically range bound here or in an uptrend, consolidating sideways. This is the upper level support, and we clearly have some resistance up here around 259, which is where we ran into on Thursday. So I think in the short term, the tactical levels here are pretty clear. We are back above the 20 period moving average. It's starting to flatten out here on the daily chart. We're right at that 8 period, just fast moving averages that I prefer to use on my charts. And you can see again, just kind of consolidating sideways here. Not a horrible thing whatsoever. But if we start to lose this level, we can kind of think back to that conversation we had at the top of this video about the weekly chart. Maybe if we, start breaking below and getting a close below 256, that opens us up to a more sort of meaningful pullback. At this time, we're not seeing it. Support's demonstrated. Let's see how we kind of act going into next week. It's a holiday shortened week. We got Thanksgiving. Volume will probably lighten up, and maybe this was sort of the capitulation, or the, at least the short-term bottom that was put in place, and now we can kind of float around or, grind higher, as it's really been the case throughout most of 2017. So that's the landscape here on the S&P 500, on the SPY ETF. The more interesting index this week was the small caps. So small cap stocks looked at by the IWM here, the IWM ETF. You can see on the weekly chart actually had a 1.27% move to the upside. So a good amount of, positive divergence that you could say, if you're looking in context of the small caps this week, as it really did sort of, help lead this market higher, or help at least hold the ground from lower prices. If we look at this formation here on the weekly chart, you can see we've been pulling back now this is 6 weeks off of the highs, really sort of consolidating, and you could arguably say retesting this big kind of expansion higher, this breakout above this 144.50 level, if you want to use the late September bar here as your kind of breakout ignite bar to the upside out of this channel, outside of this range. We kind of came back down and really just barely retested that and reversed strongly, closed near the highs of the week. Not the strongest volume, but still good price action, just looking on a price action standalone basis. On the daily chart here, you can see we did wash out basically on Wednesday, just like the S&P 500 did. We came all the way down and retested about 144.50 or so, maybe even filled this gap if there was a small one in here, rebounded, got the follow through, and got more follow through on Friday. So this is a position we still have on. If you recall, we talked about this in the last couple of videos. The entry for us was on this bar right here. This was the 8th of November. And basically the thought process there, as we sort of described in the video, was, look, it might not be an exact entry. We're going to give it some room, and we're going to see if this can just stabilize here and reverse. It did push our patience a bit in here, but we did maintain through the trade, and we did end up scaling out some profits right in here, pretty much exactly where the close was today. Took just a small piece of that off, about a third, trail up our stop a little bit, and we're still going to maintain this position here in the IWM. I like this kind of double bottom, this undercut here, and this fast move higher. I still think it's got plenty of its work is still cut out for the bulls here. I think it's still in a consolidation pattern. It needs to really get above 149, 150 with momentum to see a more sustained leg higher, second leg higher on that bigger time frame. But for now, it looks like dip buyers have stepped in here, and this 145 level is a pretty good line in the sand going forward. So we remain still long the IWM, took a little profit there, and we'll continue to hold it. Next is the NASDAQ 100. We did close positive here in the NASDAQ 100. You can see this has been the recent leader over the past month or so. It's been charging higher ever since breaking out above 146 or so. If we go back down to the daily chart, you can see closed near the lows here on Friday, but basically, or just barely, got a all-time closing high here on November the 16th. Let's see if they actually made it. 154.54. Yeah, so we did get one. So we got a new all-time closing high on Thursday, and then we pulled off a little bit off those highs here on Friday. So again, above a rising 8 and 20 period moving average, the trend is higher. The weekly chart's not too extended, still, really cranking to the upside here, and has been the recent leader. So NASDAQ 100 still in pretty tip-top shape. The Russell 2000s put in a fairly convincing bottom, saw a nice reversal this week. We're going to just see if we can get the stabilization there out of the SPY and continued strength in the IWM to really help fuel this market higher into the holiday shortened week and the end of November. So that's the market environment overall. Let's take a look here at some of the other major markets. We'll go to TLT next, which had a nice week to the upside, 2%, and it's starting to get above this very critical level we've talked about, this 125, 126 area, more around 126 or so. It's starting to inch itself higher here. It's trying to hold in. It had an ugly session on Thursday, but take a look, it completely reversed it and closed near the highs of the week here for TLT. So zooming out, you can see it's still in this kind of sideways, a bit of a messy pattern, but bulls are trying to inch up there and threatening that breakout to the upside. We'll have to see if we get follow through next week. I think that's what's key, and that's something that we'll be wanting to basically pay attention to next week. GLD is up next here, and you can see had a strong session here on Friday, up 1.19%. to the upside here on Friday. Strong volume coming in, 10 million shares here on the GLD ETF. If we go to the weekly chart, you can see up 1.4%, most of the gains coming from Friday's session, but we are clearing above a very tight range, sort of 3 weeks of trading, and we're starting to clear back to the upside here, get it back above the 20 period and 8 period EMA here on the weekly chart. That is constructive action. Say the overall kind of pattern and trend here on the longer term time frame is still pretty tough for GLD, but I think clearing above the recent highs here this week is constructive, and more follow through above 123, 124 is going to be even better. So for now, I think GLD bulls, maybe you get some technical kind of momentum building here. This 120 level is a good sort of line in the sand. You remember we bottomed out here in October, had a small rally, came back down, carved out a range, and now we're starting to move higher here. So could be a false move, could be a fake out, breakout to the upside. We'll have to see going into next week, but so far I like it. I like the pattern. I have no position at this time in GLD, but I do have a position in silver. We talked about the position I had in silver back on, I believe it was this day right here, was our entry day on the 1st of November as we started to break out above this channel here to the downside, and really just had a lot of sideways sort of emotional trading in here. These ranges are pretty wide for SLV, and you can see we really just kind of battled it out around the $16 level. And once again here on Friday, we got that range expansion to the upside, trying to take out these highs. Couldn't close at the highs of the session, but we did see some good volume here. So pretty much the same comments as GLD. I like silver. I have a position in it. And again, if we go to that weekly chart, you can see starting to try and clear above the past 3 weeks or so, back above that 8 and 20 period moving average. So we'll see if both metals can get some follow through to the upside, could start a good move higher into year end. That's certainly my hope, as we are positioned for that right now, but anything can happen. So keep those stops in place and plan accordingly. So those are the metals. If we go to oil next, had a nice session here on Friday, up 2.5%. If we go to the week, still finished down, but it did kind of check back towards this 8 period EMA here on the weekly chart. Gave you a little chance to jump in here and buy the dip if you were bold enough to do so, if you wanted to be involved in this trend in oil that has emerged recently above this 1050 or 10 and a quarter level on the USO ETF. You can see it came right down to this 20 period EMA, found support, bounced, had a nice finish here on Friday. So we'll see if we get some continuation there. You got a potential higher low to work with right around that $11 level. And if we go to natural gas, you can see pretty much still stuck in the sand here. But again, we've talked about this kind of false breakdown down here to new year-to-date lows back to start off the month of November. That quickly was rejected. We pushed all the way up to above 650, pulled back, and now we're kind of just sitting sideways in a bunch of supply in here. And the bulls are really going to just want to see us get back above 650, 655. That would keep things looking as constructive and potential sort of reversal to the upside as strong as possible and in good sort of standing. If we do lose 6 and a quarter or 620 or so, all bets are off. Then we have to be suspect and be a little cautious. The weekly chart here on UNG is still, again, fairly suspect, but it has spent quite a bit of time moving sideways and chopping around this 6 and a quarter level. So some interesting moves here with the metals and UNG specifically on potentially setting up for some bigger moves. We'll see if we get them and some of that confirmation into next week. So that's all of the major markets. Let's jump into some of the sector analysis. We're going to go to XLY first, which we identified on Tuesday, but got even better into the end of the week here. The discretionary ETF is breaking out here to new highs. You can take a look here ever since June of 2017. It's been kind of stalled out at this $92 level. We broke out to the upside, and we are closing here at new highs for the XLY. pretty good volume coming in there. So things look pretty good for that group of stocks. If we go to healthcare next, I've been liking this around here at the bottom end of this range. It's taking its time. That's, sometimes not a good thing if it really kind of just, sits lifeless on support. But we still have, these lows that are more or less in place around this $80.50 level, which basically coincide with the lows from September of this year. And if the bulls can kind of step in here, drive us higher off this range, then, we'd be in good shape. But we're at support for XLV. There are some interesting setups there in this space on a stock-by-stock basis, so I encourage you to take a look at those if you're interested in the XLV. Materials had a kind of a nice finish to the week here, and the weekly chart is actually what really looks good here. Take a look at XLB, which really just ran away to the upside throughout September and October. It stalled out or, kind of failed around this $59 level, and it spent about 3 or so weeks pulling back. We get a nice kind of hammer or reversal candle here on the weekly chart, finishing green after probing all the way down to almost $57. So a pretty interesting look here for XLB on that weekly chart. The daily chart, you can see it's struggling to get back above the 20 period. Something to pay attention to, though, had that nice sell-off, maybe gets a rotation back into it, again, heading into year-end. So I like XLB there for potential sort of reversal trade. On the downside, if we look at things that aren't working, or actually, no, we'll stick with things that are reversing, is IBB. This has been getting clobbered since early October. It's basically been 2 months of selling off. This week we saw a pretty good reversal here, a fairly meaningful reversal, traded down to 301, finished the week at 311, had about a 10-point bounce off of those lows. You can see the way it finished. You're going to want to see confirmation here, and depending on how active you are, this is probably a space you may or may not want to be involved in yet, but you did get kind of a washout candle here on Tuesday of this week, and then we did claw and regain all of the sort of washed out action from Tuesday into the end of the week. So you might have a tradable low here for IBB, kind of coinciding with the August lows. Tactical traders, you probably want to pay attention. Longer term time frame, maybe looking for some more confirmation there, but IBB I think is pretty interesting. On the downside, or things that didn't go well this week, was XLE. There's a pretty ugly week for energy here. The ETF down 3%, even though USO did kind of balance itself back out and move to almost break even on the week. We saw a failure to actually clear above these highs here. So essentially last week we had a breakout above this sort of 5-week consolidation here right around $69. Then we kind of very abruptly failed back below it. That's never a good sign for sort of short-term momentum. Maybe this is it. Maybe the selling's done, but maybe we just need to carve out some sideways for another couple of days, weeks. We'll have to see how this plays out. But for XLE, I'd want to see us back above 69 or so. That would give me confidence in sort of the regained momentum. And finally, IYT, which has been struggling recently. We've been talking about it. Had a nice kind of bounce back on Thursday, and then it gave a lot of it back on Friday. So still kind of, just hanging out near the lows here. We're below the 20-period EMA now on the weekly chart. Sounding's getting a little bit, tiresome here. Maybe it's ready to bounce after 3 or 4 weeks down in a row, but it's still in a space that really, in a place that the bulls really need to prove themselves at this point. It's not something that I think we can easily just take for granted and buy here. We want to see a little more stabilization. These moving averages are still in a pretty ugly formation. So that's all I have for today's weekend recap. Thanks so much for watching. As always, do subscribe to our channel if you like these videos. Have a great weekend, and talk to you guys on Tuesday.